All right, Mr. Chris, we're together, right?
Yes, please.
All right. So
Yeah.
we can see the bullish move. Now we have a valid pullback because this took out the low of the highest printed candle. So it means this is our impulsive move. This is the high. We have our pullback to the downside. We
Yes.
have this movement to the upside. We have to identify the last candle that prints the high. And we can see that it is this bullish candle that printed the highest point.
Uh-huh.
So,
Yes.
meaning we have to identify the low of this candle. For us to have a valid pullback, meaning the price delivery to the downside must clear the low of this bullish.
Low of the highest.
Yeah.
Yes.
But what we can see
Yes.
here is the high is protected and the low is protected, meaning we do not have
Yes.
to pull back here. So it means this is the entire push of price to the upside from this low to this high points. And these movements are just within this bullish candle.
Yes. Yes.
So for this other example now, we can see the push of price to the upside. The market created the highest point. So our expectation is to see the pullback will take out the low of this bullish candle. But here you can see the
Yes.
pullback did not. So this bearish movement is still within this bullish candle. So it means what we
Yes.
have is just an impulsive move to this
Straight.
here.
Yes.
So this is the highest candle now here. We are to
Yeah.
identify the low of the candle, and this is now the low of the candle. So we're expecting to see that for the push of price to the downside, we take out the low of this candle.
Low of yes.
And we can see
Yes.
how price took out the low of that candle. So meaning we
Yes.
have
Yes.
a valid pullback here,
Equivalent
and then we
pullback.
have price continuation to the upside. This is how you identify the valid pullback from the pullback that is not valid.
Yes, please. Thank you.
So
Yes.
these are key stuff to take notes of in structure identification and the pullbacks. Because understanding how to identify the pullbacks help you to know how to identify structure itself. When it comes to your analysis, there must be flexibility in analysis. When you're analyzing the market, and let's say you use the 4 hour time frame to want to identify your structure, your point of interest. Say, for example, it is so noisy, it's giving you a confusion. Then you need to look into the daily time frame. You
Okay.
get it?
Yes.
That helps minimize the noise in the candlesticks you're seeing.
Okay.
Yes,
No,
but
or can I
on.
or can I go to the lower time frame? Say, wait, 4 hour being my main high time frame.
Yeah.
Can I move to, let's say, 1 hour to see if I can see things clearer over there? Or with that one, it's up to me. If I go to the 1 hour and I can see it or I can understand it, it's fine.
Yes.
Or the daily.
Okay. If you can go to the 1 hour time frame and understand, which could be possible, then you can frame from the 1 hour. But you must understand that the higher time frame is now the key. Higher time frame is stronger than the lower time frame.
The lower time. Okay, yes, that thing is there. Yes.
Get it? So the higher time
Yes.
frame is stronger than the lower time.
Than the lower time frame.
When
Yes.
you're
Yes.
facing a confusion of establishing your structure, let's say for example in the 4 hour time frame, and then you go to the lower time frame to want to do that, you might end up just encountering the trade
Yes.
losses.
Yes. Yes.
Because the higher time frame is the key. The higher time frame gives you the main structure. You get it? So
Yes,
the
please.
4 hour time frame, and then the 4 hour is giving you a confusion. The best thing to do is just try to check
Go.
daily saying.
Okay.
You get it? Since daily is higher than 4 hour, daily time frame will minimize the noise in 4 hours. You
Yes.
get it? So the daily time
Yes.
will minimize the noise for you. That is what you must look into.
Okay.
Yeah.
Thank you.
So let's just see how you could possibly just map out a structure. So here we can see we have this bullish movement of price to the upside. Now, we
Yes.
look at where we actually had the major reversal. You get it? Now you can
Yes.
see here we have, let's start from here. This is the last high that printed this low, right? This is
Yes.
the last high that printed this low. And we had this push of price to the upside that broke this. And then you can see it turned into a bullish trend.
Bullish. Yes.
All right. So now we have this low. Price pushed to the upside, gave us this high, right?
Yes.
And then we have the fall to the downside. Now, what you can see here is from this daily time frame, basically this is our structure. This is the low, this is the high, right?
Yes.
Now, this is a fall of the low.
Yes.
If you want to have a reversal here, a major reversal, meaning the market has to take out this low points. Are you getting me?
Yes, please.
Because
Yes.
the main low points. But if
Low.
you look into the corrective leg move, you can see we are having a bearish structure. Are you seeing it?
Yes.
You can
Yes.
see we are having a bearish structure. This doesn't mean that now the market is bearish completely. This is just a pullback. The market becomes fully bearish movement when it takes out this low. Because this is the low that's the
Yes.
move to the upside that broke this structure here. So for you to have a major market structure shift, then the market must take out this low here. Within the pullback move, you're having a bearish structure because you can see the market
Structure. Yeah.
this took out this low, took out this low, took out this low, finally returned to the downside and then gave this movement to the upside.
To the upside.
Now, you know, your anticipation is to see that price would take out this high point, right?
The high.
The high.
Yes, the high.
But now the market failed to take out this high. Rather, the market returned and then took out the newly created low points. So this is where we now have the market structure shift.
Why not the just the previous low?
Yes, now definitely.
The one you cleared, no?
Yes, now let me return it. Basically, what you're going to see is it's actually here we had that shift in market structure. So now, you know, the anticipation is to see that this continues bullish to take out this high, right?
Yes, that high, the high. Mhm.
But then this failed to take out this high. This movement
Yes.
failed to take out this high. Are we together? And now we
Yes, please.
fall of price to the downside, took out.
Yes.
Now, ideally, based on theoretical expectation, you know, you want to see further that the market will take out this low
Yes, that low.
because this is a
Yes.
strong low. This is a weak low
Yes.
because it failed to take out the external. Are you following me?
Yes.
Price gave us a shift in the market structure by identifying the high points. You get this failed to
Yes.
take out this, meaning
The previous high.
yes, meaning the market now is failing to create a higher high. So you must understand that when the market is failing to take out a previous high point, are we together?
Yes.
You,
Yes, please.
the market is also aiming to change its direction. You get.
Okay. Okay.
You should also have that understanding that the market is aiming to change in direction, meaning the institutions are failing to sponsor higher prices.
I said that low that we are having here is considered as weak because it couldn't take out
This high.
the current high.
Yes. Okay, this is it. Now, let's say we have the push of price to the upside. Price fell, this push and took out this high, right? And then we have
Yes.
this fall to the downside. And then this fell to take out this high. You're getting it?
Yes.
And then we now have
Yes, please.
fall of price to the downside. So you can see that this low,
Low.
high points.
Uh-huh.
Now let's
Yes.
identify that. The low broke this
Yes.
point,
High point.
and then this is that low that sponsored the impulse. Now we are expecting this newly created low. Let's mark that out. This newly created low points.
To take out the
to
high.
take out the high resting above this high
Yes. Yes.
expectation. So we want to see how it
Yes.
takes this out so that we can see further bullish continuation. This is a strong low point because this took out external liquidity. Yeah.
Liquidity. Yes.
Now, this
Yes,
fell to the
please.
downside, created this low. This low failed to take this out. This is a weak low.
Yes.
So this is a weak
Okay.
low. So we have the possibility, the high possibility that since this is a weak low, it will lead to the change in the market character. Because now
Character.
the
Okay.
institutions did not further sponsor higher prices. You get
Okay. Okay.
yes.
Yes, please.
So it is in such cases within this zone is what we have a sponsorship candle that we call the mitigation block. The mitigation block is a form of an order block that creates a movement but then fails to take out a previous high point or low point. Now, if this should create this movement and takes out this high, and then price fell to the downside and then took out this low point, the sponsorship
Yes.
candle we have here is now what is called a breaker block. You get
A breaker block.
this sponsored the movement that took out the high,
Yes.
and then price fell and then broke through it, violated it. You get. But then for the
Yes.
the mitigation block does not take out a high.
The,
This is the movement
okay.
it failed to take. You get.
Okay.
It fails to
Yes, please.
this liquidity, and then price fell and then broke through it. This is a weak low.
Okay. Okay.
Yes.
I get you now.
So once you can also identify the internal liquidities within this movement, and then you see that price return to the downside and break this, then you can identify this as a market structure shift and not necessarily have to
Okay.
wait for the price to take out this one.
This. Okay. Okay.
Get it?
You. Yes, I get you now.
Now,
Okay.
because you can see internally, you can see we have all these liquidities here. You have this swing low here.
Yes.
You also have this swing low here.
Yes. 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 Yes.
So the market took out all the liquidities inside here and further went to take out the liquidity of this low. You get?
Yes.
Meaning we
Yes,
have the
please.
possibility to define our market structure shift because we can see that it is failing to create higher prices. So, and one thing I would want you to also understand is having the textbooks explanation are awesome, but you must also be flexible during back testing to see what the market is showing you. You get
Yes, please.
helps you to
Okay.
build a conviction for yourself about how to read price.
Okay.
Yes. So now what you can see is now we have price failed to create a new high point.
A new
We
high.
have the
Yes.
shift in the market structure, meaning the institutions are failing to further send price to the upside. And then price return and took out
Sure.
the low. You get.
Yes.
We can
Yes, please.
identify this as now our market structure shift. Meaning we are seeing the possibility of price not becoming bullish again. We are having a reversal. We can see that price fell to the downside and then this candle closed below the low, right?
Yes. Yes.
This candle body here closed below this swing low. So we have a valid market
No.
structure shift.
Yes.
So I was saying, if you just want to be so careful, and then you are like, let me wait and see that it takes out this strong low, then I would want to be convinced that I have an ideal market structure shift. But problem is you would miss out in a lot of positions because
Yes.
imagine this pullback and then this is the move that clearly took out this low. So you can see
Yes.
to miss out from this movement.
Yes. Yes.
That is why you must also understand that you can have price failing to create a high and then price falls to the downside to take out the previous low. So now we've established
Yes.
that you can see here we have a market structure shift.
Shift.
Since we've established our market structure shift, the fall of price to the downside took out this low. So what you're anticipating to see, how you're anticipating to take your entry is you want to see the pullback of price and let this pullback of price takes out an internal liquidity. You get, because what you can see, price
Yes.
fell to the downside, took out this low points. You want to see a pullback that will take out internal liquidity to validate this swing low. This swing
Yes.
low must or should return also to take a liquidity inside.
Yes.
You get it?
Yes. Yes. I believe that's the inducement. At least
Yes,
it must take inducement. Yes.
yes. It must take out the inducement.
Yes.
So it should take,
Uh-huh.
what you can see is basically this is also very close to the swing low. You can see
Yes.
very close to the swing low. So you should expect that definitely the market would want to pull back and take it out. Therefore, you don't want to frame your entry from this fair value gap here.
The problem that I was encountering with is with when it comes to the inducement in the higher time frame like this.
Okay.
I usually take the high of this impulse. Aha. That's where I usually set my inducement to be. I consider this the one that you've marked.
This one I'm
Yes.
marking now. Okay.
Aha. That's where I use as my inducement.
Okay.
I see the smaller one that you just checked, you just marked as like a minor structure.
Okay.
It's within this impulse down. If you can see, it's like impulse, then correction
Yeah.
from the top. So impulse, then correction, correction or pullback,
Yeah.
then impulse, then another correction, then impulse down. But with this one, I see. Yes, I see the one that we've marked as the inducement
Yeah.
as like within this impulse down, this small impulse down. So I usually wait for the one I think to be the inducement to be taken out before.
Okay.
And after taking out that inducement, I wait to see if I can get some a point of interest at the higher at the upper side.
Okay.
Usually, what I've learned is you sell at premium and you buy at a discount. So after taking out the inducement, I just look out for point of interest. Let's see the fair value gap, order flow,
Yeah.
order blocks.
Yeah.
I usually check those things.
So now you must also understand that we try to establish rules so that we can trade rules. You get,
The rules, okay.
but then you can
Yes,
also be flexible in the market. You know, there are situations that price will not even pull back to premium.
yes, yes,
There are situations like that that price will
yes.
pull back to premium. So the fact that we established, or let me say the institutional traders established certain rules, doesn't mean that the market would obey that rule throughout. You get it, sir?
Yes,
The
please.
market
Okay.
obeys the rule throughout. It means everybody then that is trading forex should be making money all the time.
Yes. Okay. Yes,
Understand
yes.
that these rules are set to keep one safe. You know, okay, this is what you're looking for. You get it. Okay, let's now,
Yes.
for example, let's look at the weekly time frame. You can see something here. You can see here in the weekly time frame, right?
Yes.
You can see that inducement you are looking at is the ideal inducement from the higher time frame. You can see it here. That is the ideal inducement.
Yes.
Here from the weekly
Yes.
time frame, this is not the inducement. It is this one.
The inducement.
You're seeing it.
Yes.
You can see it is this one, the
Yes, please.
inducement. Aha. So that is why I said the market is fragile. You get, the market is,
Okay.
meaning you have to be flexible in price analysis. Now,
Okay.
what do I mean? When you see from the weekly time frame, this is your inducement. That is why we said you would see that there is also structure in lower time frame. But then in the daily time frame, the
Yes.
structure. You get. Now,
Yes.
sorry, Mr. Chris, I want you to really understand it. Let's go back to the daily and out the structure inside it. Let's look at this, that we have this fall, right? We have this pullback. I want to mark it out from the daily so that we go to the weekly so that you see something. And we have this pullback, right? And this is a pullback because this took out the high of the lowest.
Yes.
Now,
Yes.
and
Then
this is
yes.
back.
Then pull back.
Now we have
Another four.
now we have this pullback, right? I seen it.
Yes. Yes.
Have
Yes,
for
please.
you can see this is the last candle, and then we have this pullback. You can
Pullback. Okay.
we have
Yes, please. Okay.
we've marked it out here from the daily time frame.
From the yes.
Now, and what you can see from the daily time frame is this. Are you seeing this high here?
Yes, please.
Now, we are basically looking out for market taking out liquidity. Now, when you see
Yes.
here, this high
Mm,
took out this liquidity here, took out this liquidity,
yes. Yes.
also took out this liquidity. So meaning we have this took out this liquidity, took out this liquidity. Now let's go weekly time frame.
Okay.
Now you can see that from the higher time frame, this is just an entire impulsive move.
Impulsive move. Yes.
We saw structure inside it.
Yes.
That's
Yes.
what we
Yes.
mean by price is fragile. You see structure in higher time,
Mm,
structure in lower time frame.
in the lower time frame. Okay.
All
Okay.
of this one aligns. You can see push to the upside, price pullback gave us this low. Push took out this. You can see that the weekly time frame is giving you a clearer picture to the structure.
Yes.
So you can see this is the high, price fell, created this low. Push to the upside, created this high, price fell, this failed to take this out. In the daily time frame, in this impulsive leg move, we're seeing structure to inside.
Within them. Yes.
In the weekly, it's just the impulsive move to the upside
Move.
because we
Yes.
to a high
Yes.
time frame. You get it?
Okay. Yes, please.
It is just the way I told you in I told you before that when you analyze from the 4 hour time frame and then you're not getting a clear picture, the best thing to do is to switch to a higher time frame. Now, when you check from the daily time frame, your expectation you were like you would want to see the market would take out this low first. But now what you can see from the weekly time frame is you can see that this pullback have already mitigated this other block.
Yes.
You can see this pullback to the downside. I've already mitigated this other block.
Okay. With the green candle is the other block or the black one?
Now it is the black one. The last down close candle before the bullish move is the other block. So you can see now
Yes,
price
please.
return into that zone and I've already mitigated it. So
Yes.
it has made this
Yes.
now that it has the possibility of not holding price next time because it has been retested.
Yes. It has been mitigated already.
Yes,
Okay.
it has
Okay.
been mitigated already.
Yes.
The anticipation is if this then should continue bullish, you want to see the on to this other one here. But you can see that broke through it. You can see
Through it.
this
Yes.
is why I said that is where we actually have now the ideal market structure shift. You get it?
Okay.
When the
Yes.
lower time frame is not giving you a clearer picture, you need to switch to a higher time frame.
Yes, please. Okay. Okay.
So you can see we identify the structure in the daily time frame, but here in the weekly, you can see this is just an impulsive move to the downside.
Yes. Yes.
All right. So now what we have is, from the daily, we saw that this pullback took out liquidity here, which you can see these two lines here. So
Yes.
from the
Yes,
weekly time
please.
frame, ideally from the weekly time frame, this is what you want to mark out as your inducement.
Ah, inducement.
Yeah,
Yes.
you want to see how the market will pull back, take this high, and then continue bearish. You get.
Yes.
What you must understand is this is a weekly time frame. So the possibility of that happening would take time.
Weeks. Yes.
So that is why once you've identified your main zones from a higher time frame, you go to the lower time frame. You get it? To look at
Yes.
possible zones that price will face rejections before reaching higher time frame zone point of interest. So here you can't find the inducement, but when you drop to a lower time frame, you would find inducement. So if you find inducement in the lower time frame, I get it.
Yes.
You can use the inducement in the lower time frame.
Yes. You see that if I can find inducement in the lower time frame.
Yeah. So if you find inducement in the lower time frame, then you should expect that the first thing the market would want to do is to take out the inducement in the lower time frame and then mitigate a zone that is above the inducement or below the inducement,
Yes.
depending on the condition of the market. You get. Meaning, if the market is bearish, Definitely your inducement is on the high, swing high.